The cup and handle pattern belongs to the top 5 most reliable and powerful patterns I know in the stock, futures, cash currencies and any other financial market. If you want to buy stocks right before the explosive rally, keep watching. Good day, this is Michael Lexman. In this video we'll discuss the most important things in cup and handle pattern trading. What is it like and what are its components? Smart money and uninformed crowd-specific habits in the formation of the cup and handle pattern. You will see for yourselves that you will always need to side with big capital. I have developed a very effective technique that makes it possible to align this pattern with big capital behavior. I'll show you how it works. Optimal entry point, optimal values for stop loss and profit target. The volumes necessary for the pattern to work like a charm. Pro tips, and sure enough, we'll discuss real-world market case studies for several stocks and one commodity. If this is your first time and you want to learn financial market secrets, how to make money trading stocks and other securities, what are the most profitable strategies, what stocks bring the biggest returns, technical analysis tips, and all types of other financial market-related stuff, start now by subscribing and clicking the bell so you don't miss anything. New videos every week. This is how the cup and handle pattern looks on chart. This is a price move that at first resembles a cup and then the cup's handle. When we trade the cup and handle pattern, we expect that after a minor downturn there will be a breakout and the price will continue to rise. A previous trend is the necessary condition for forming the pattern. The stock price is within the uptrend, reaches a certain peak and starts to drop. At first this downward move reaches stagnation, forming the base of the cup, and then the price rallies almost to the previous high level. This is the time when the traders who entered the position close to the first high begin to sell. The price goes down, forming a cup handle. My approach to trading and investing is based on patterns in big capital behavior. I found out that any technical analysis pattern would work like a charm only if big capital intended to move the stock or futures price up. Once the big capital patterns in the financial markets comes into action, conditions are created under which the crowd starts to sell. Big capital buys stocks or other securities from them at a reduced cost as it expects an upward price move. See how the first high was formed. When uninformed investors see that the stock or futures price stays in an upward trend for a long time, they open a position approximately in this area. In a little while, the price reaches its high at this point and starts to drop. When major players intend to continue moving the stock or futures price up, their actions result in the formation of the cup base. Here they buy stocks or futures at low cost from investors in doubt. Little by little, the price begins to rally again, reaching approximately the previous peak level. At this point, the uninformed investors who bought the stock or futures in the high area number 1 and didn't sell at the level of stagnation, keeping a losing position, feel extremely happy about the possibility of closing the position without a loss or with a minimum loss. This is where they begin to sell chaotically, and that's why a second peak forms the pattern's handle. At the moment when the crowd closes almost all their positions, big capital enters the market, increasing volumes, and the stock or futures price starts its rally. Little by little, the crowd enters the market and helps to boost the new trend move. For your special benefit, I have prepared a free video training called Insider's Hack number 1 – How to predict prices in stocks and commodities with 95% accuracy. The method is based on real actions of large market powers. In this free video training, I'll share in detail the patterns in big capital behavior and how to learn in advance that smart money is preparing for the next big trend. The link is in the description, so please sign up after watching this video till the end. In my Twitter feed I post fresh market insights that can help you make better trading decisions. There I also post my recent big winners in stocks, futures and some currencies. There you will see the stocks that I select based on my custom analysis method, when I see the potential for a big trend movement in them. For each security I show my low-risk entry point a few days before a strong trend begins. The stocks I select very often grow in price by 50%, and some of them may even double their value in just a few weeks. You should see this to make sure that price action in the financial markets is indeed predictable, and understand that if I can find out so precisely and well in advance which stocks go up, then you can find this out too. So watch this video to the end and then check out my Twitter feed to see how my forecasts prove to be real-world market movements worth millions of dollars. And now let's move on. This pattern is formed at its best when the high on the cap's right side is formed at the same level or a bit below the previous high level. When forming the handle, the stock of futures price has a slight downward drift. Anyway, we need to see a turning point when the price starts to rise again in this area, just above the midline of the cap. If the handle drops below the midline, it's most likely that this pattern will not work. So we have two main points, old high number 1 and new high number 2. They serve as a certain critical level for the upper trendline of the cap and handle pattern. When the market price reverts at this point and moves up again, we see that the cap and handle pattern is formed. That's where things get interesting. Now I will speak about the entry into the position. It's a common belief that the most reliable entry point is right here, just above the level of the second high. Here's my tip to you. This trendline breakout shall take place at large volumes, or an increased volume shall emerge right after passing this level. This is one of the signs that the large market powers are in the game. When trading any technical analysis pattern, it's important to remember that the optimal entry in the position is within 5% above the pattern's trendline. It's risky to buy stocks or futures after the price goes above 5% after the breakout. Well, we passed this level with large volumes. How long do we stay in the position? We need to measure the distance from the second high point to the cap base. The same distance applied to the handle's bottom level gives us the target projection level. Classical stop order placement is at the point just below the handle. Now let's talk about the duration. The best big winners that I've seen in different financial markets have the cap formed for a rather long period, 7 to 12 weeks or even up to 20 weeks. So, tip number 1. Avoid handles that drop to or below the midline of the cap. Tip number 2. Volume is the most important indicator for the cap and handle pattern. The critical level breakout should be at the increased volume. We are going to dive into the most effective ways of applying the cap and handle pattern in just 1 second, but before we do, I want to know what is your favorite technical analysis tool. Put in the comments below, because let's help each other become better traders. So comment below with your favorite technical analysis tool for trading. Now I will show you real-world historical examples of using this pattern for stocks and futures. This is the weekly Home Depot stock chart. Let's see how the cap and handle pattern behaves on this stock chart. In August 2016, the price reached its peak at the level of 139 and started to drop. By volume, you can see that big capital actively bought stocks from the crowd in this area for about 120. For more than 20 weeks, the price had been forming a cap. By the way, the longer the cap formation, the more reliable the pattern. The price here formed the second peak just below the first one, reaching just above 137, and then 3-4 weeks later formed the cap handle. Then came the critical level breakout at the increased volume, a minor retest when the price turned back to the trend line, and then a further price move upwards with growing volume. Let's see how the target placement rule worked. Let's measure the level from the second peak to the cap base and add it to the candle's bottom level. It all worked perfectly. After a small stagnation, the stock price moved further up, but we would apply another pattern here. Be sure to subscribe to my channel to learn the most reliable patterns of technical analysis. You will discover a myriad of useful things about the investing and trading world. Please pay attention to this area. The cap handle dropped below the cap's midline. This is the first breach of the requirements for cap and handle trading. Then there was no volume at the critical level breakout, breach number 2, so no upward trend followed. Therefore, you must learn to identify and apply the cap and handle pattern correctly to minimize the likelihood of errors and losses. This is all about practice. Knowledge without practice is useless. Therefore, with the utmost dispatch, right after watching this video up to the end, accomplish a simple practical task that I have prepared for you on my Instagram. It will allow you to go straight from theory to action So, as soon as you watch this video, just go to my Instagram page, check what I have prepared for you there and become a successful trader faster than others. Below this video there is a hashtag for you to quickly find a practical task, and you can use my Instagram page as a source of your daily motivation. I post many helpful things there and links to some valuable free stuff that I have. Johnson & Johnson stock. We see a major uptrend that lasted from January to August 2016. Peak prices at the level of 126, cap formation, the second peak is just above the first one. The handle formation in this area is above the cap's midline, volume growth and critical level breakout. As a result, there is a 4-week almost vertical rise in stock price up to 137. Entry at this point, stop order at this point, or a more conservative stop here. One more perfect application of the cap and handle pattern for natural gas futures. Cap formation. Note that we see huge volumes in the formation of the right side, which indicates that big capital is in the game, and this significantly strengthens the cap and handle pattern. A small handle at reduced volumes and an explosive rally with crazy volumes. The gas price has doubled in 4 months from the bottom cap level. And now I will prove to you that this all happened due to big capital actions. This is the COT indicator, and this curve is the real-world commercials net position. Commercials are the largest producers and users in the futures market. They report on their positions, and these data are published in the weekly COT report. Look, the price drops and they buy. At this point, their positions have peaked from November 2011, which means they were preparing for a rise in gas prices, right after the price began to propel upwards almost vertically. This is an example of how the cap and handle pattern closely echoes big capital behavior. That's why my approach is based on studying the patterns of big capital behavior in the first place and the use of technical analysis and price patterns only in the second place. Now I'm thinking about making more videos about price patterns, indicators and technical analysis. So if you want me to do that, put in the comments below, yes, I want more technical analysis tips. You can add what type of information you are interested in, and I will try my best to make this happen. If you got value from this video, please do me a favor. Just hit the share button below this video to share it out on your networks, Twitter and Facebook. The more you share this message, the more people will be grateful to you, especially me, because it will help my channel to grow faster, and I'll be happy to give more value to you in my videos, so please share it. If you want to learn how to predict prices in financial markets and make huge gains with this knowledge, click the link in the description to check out my free video training, Insider's Hack Number 1, how to predict prices in stocks and commodities with 95% accuracy. The method is based on real actions of large market powers, because to make right trading decisions, you've got to follow the direction of big money. And in this free video training, I will show you how it works. If you are serious about becoming a successful trader or investor, make sure to sign up for this free video training right after watching this video till the end. It's absolutely free and it's extremely valuable. So use the link in the description or go to my website investwinners.com. Click this button, enter your email and name, and I'll send right to your inbox the link to access my training for free. You also may be interested to discover membership options that I have. Members of my website receive my weekly report featuring stocks that are ready for a big market move according to my analysis. We catch big winners every single week and you are welcome to join. Check our recent big winners on Twitter, InvestWinners, and follow us. Make sure that you are subscribed for new videos every single week. Thank you guys for watching, give this a like if you enjoyed it. I'll see you in the next video, and be smart, follow the direction of big money.